Dear investors, welcome to the June 2025 monthly roundup video. The US inflation is 2.7% for the month of June, whereas the India inflation is 2.1%. The US economy is projected to grow at 1.7%, while the Indian economy is projected to grow at 6.5%. So in US, the growth is less than inflation, and in India, the growth is significantly higher than inflation. I could actually end this video at this point by telling you that just keep investing based on valuation and you can't go wrong in the long term. But where is the fun in that? So let's continue. Trump tariffs are the biggest threat currently to global economic growth. After 7 months of going to and fro and a lot of confusion, finally the tariff rates of US on various countries are taking a definite shape. China, Japan have negotiated tariffs with US. India would do it soon too. In the US, business activity has increased in June. Their labor market is stable. But as you can see, most of the companies in US are actually passing on the tariff costs to the end consumers. This can clearly increase their inflation in the second half of 2025. The US president may well hope for the interest rates to go down, but if the inflation threat looms, then Federal Reserve may not go for a rate cut. Now, no rate cut in the US would mean good yields on US bonds. So, this fickle FII money would be difficult to come to India anytime soon, is what I feel. Does that mean that share market is going to fall in India? I have no answer to that. Since the last 2 days, the markets are falling, with the fall being more predominant in mid caps and small caps. After a continuous run up of 8.5% in the past 3 months, the market has gone down 3% in the month of July so far. The HSBC India manufacturing as well as services PMI rose to 58.4 and 60.4 respectively, marking strong expansion in business activity in the services as well as manufacturing sector. The demand is soft in the domestic market, as can be seen from the car sales that went down 6% year on year in the month of June. The interesting thing to note is that the government has spent close to 20% of their planned capex in the month of April and May 2025, which was clearly lagging last year due to elections. With record dividend by RBI, the total capex for the year FY26 would definitely boost consumption demand, and the above normal monsoons will boost rural demand. In terms of rate cut, although inflation is low, I still feel that RBI is going to look up to Federal Reserve and not go for any rate cuts in the month of August or September monetary policy meeting. The retail inflation for FY26 is projected at 3.7%. If the Indian economy grows at 6.5%, then our financial markets would definitely do better. The earnings of Nifty 100 companies grew at 2.4% in the April to June quarter, which translates roughly to 10% earnings growth for the full year FY26. Please remember that earnings growth is the returns that you'll get in your equity or mutual fund portfolio over the long run, preferably 10 years or more, provided you have invested in the right products at the right time, that is at right valuation. A valuation based approach always works over the long run, is what I have found from years and decades of research, and also by investing the portfolio of my clients in the past 2 years. Whenever I discuss valuation, I have heard many people tell me that no one can predict the markets, and I completely agree with that. Markets are too complex to be predictable. However, if we have a keen eye to observe the current economic pointers and skills to compare and analyze that with historic data points, then almost 60 to 70% of the time we can accurately perceive where the markets are currently in terms of valuation. And that, my dear investors, is a significant age when it comes to investing. I hope this video has been useful. Thank you. Happy investing.